Medistim Q4 2025. Medistim announced another strong quarter, with shares up nearly 10% on the earnings announcement. Today, it trades at a share price of around 220 NOK. Revenues grew 20% for the quarter, while EBIT grew 64%. The EBIT margin saw a strong comeback towards 23% compared to 17% last year. The EBIT margin was also negatively affected in this quarter due to non-recurring IT investments expensed in a P&L and not put on the balance sheet. Underlying profitability is therefore even stronger, showcasing the remarkable business strength of Medistim. Now looking at the specific regions. North America saw once again very strong growth, being the most important growth market for Medistim. The region grew over 40%. I believe the company can continue growing strongly here for many years. The incredible pricing power of the business means that increased tariffs won't weaken any demand for Medistim, and the Q4 was another example of this. Europe also saw strong growth above 20%, while Asia had a weak quarter with negative growth. This lumpiness in the Asia region is expected, as Q3 was extremely strong for the region. This was a reversion towards the mean. Looking at the full year numbers, Medistim grew revenues 24% for the full year, and EBIT grew 50%. The company keeps on producing fantastic results, and the future is looking bright in all regions and markets. For the long term, Medistim will grow revenues double digits with my estimations due to increased pricing and utilization, as well as upselling of the Intui platform. Earnings will grow even faster due to the scalability of the business model and moving direct in several core markets. The latest development was Medistim moving direct in Japan. This will increase margins here over time in one of their most established markets. Lastly, we can look at the valuation. Medistim trades at a free cash flow yield of around 4% at a share price of 220. This is while growing more than 20% in terms of revenues and 50% in terms of EBIT. I think growth won't be as strong for 2026, but still see double-digit revenue growth for the long term and more than a 15% increase in earnings per share. With their capital-light business model, supreme margins, recurring revenues, monopoly position, and incredible returns on capital, I think shares are currently undervalued. Looking at the PE multiple severely misses the mark and doesn't take into account the capital efficiency of the growth. The company also pays a healthy dividend of 8 NOK per share, corresponding to a direct yield of 3.6%. Full disclaimer, I own shares of the company. This is not financial advice.